And welcome to the Aaron Katsman Show. I'm your host, Aaron Katsman. We speak to you about your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon to be financial capital of the world, Jerusalem, Israel. If you like this content, please hit the like button below. If you've not yet done so, please subscribe to both the YouTube channel and to the podcast. And if you think somebody might find this of interest, believe it or not, go ahead and share it with them. There's a little button which says share. Hit the share button and share it with them as well. So, market volatility, markets going up, markets going down. Trump's tariffs are terrible. Trump's tariffs are not so bad. Sell the dollar, buy the dollar. I spend usually at the beginning of every day watching business television just to get an understanding what's going on. And it's rather interesting that as the trend goes, so go all of the big shot analysts. Case in point, beginning of the year, everybody was optimistic. They all had their predictions for where the S&P 500 was going to end. Everything was fantastic. Then came Liberation Day and the threat of tariffs and then the actual tariffs. And then what happened? The market started to drop. Everybody lowered their year-end forecast for the S&P 500. Amazing. On cue, everybody. And then all of a sudden, the market starts going back up. And what do you know? Well, maybe things are not so bad. Okay. The moral of the story is for all of you investors, tune out the noise and just trust the process and just buy and hold if you're able to. That's just the way to do it. But it's really interesting because everybody talks about the volatility. Keep in mind at the beginning of the year, right? We started out great. The market until the middle of February was up, 4, 5, 6%, somewhere in that ballpark. And then voila, by the time we got to Liberation Day, the market then was down 15%. So we were down like 19% of almost from the peak to the trough in a span of, a month and a half, 2 months, something like that. But what's happened since then? Well, stocks are up like 16% or whatever since the trough at the end of April. What's really interesting is that that's not so unusual. Ben Carlson says, consider the fact that there have been 41 years with double-digit drawdown. Drawdown is like from top to bottom, right? At some point since 1950. So in 75 years, more than half the years, this is me speaking, right? More than half of those years, we've had double-digit drops from top to bottom, okay? There are obviously the years, he says, when a drawdown leads to a poor outcome. In 16 of those 41 downdrafts, the S&P finished the year down. 8 of those years were down double digits, right? So only 20% of the time. But what's interesting is more than half the time it actually happens, okay? He says that's risk. Now comes the interesting part, he says. The market is often down but not out. We've had plenty of puke and rally situations. That's what he calls the whole concept here. In those 41 years with double-digit drawdown at some point during the year, the market finished with a gain 25 times or 61% of the time. That's an amazing win rate during years with a correction. And of those 25 years with double-digit drawdowns that finish in the black, 16 times the market ended the year with double-digit gain. So what's that mean? That means, first of all, just don't panic, okay? It happens, and it happens all the time, okay? More than half the years in the stock market, we have double-digit drops at some point during the year from the top to the bottom. Yet, 60% of the time, the market ends up finishing higher during that same calendar year. Okay, so what does that mean? That means you should tune out the noise and just invest, right? I know I'm broken record, right? But it's the biggest cliche that exists. It's time in the market, not timing the market, right? All the data says the people who try to time the market end up losing big time. Why? I don't say losing big time. They don't make as much. They leave a lot of money on the table. They don't make as money as they should make. Why? Because it's virtually impossible to be right all of the time. And if you miss like the top 5, 6, 7 days every year in terms of market returns, forget about it. Your returns drop significantly. You go, the S&P 500 goes from an average annual return of 10, 11% down to like 2 or 3%. Okay, so you've got it. So tune out the noise. Don't listen to market analysts, prognosticators, whatever it is, because it's all bogus. They're just going with whatever's hot this second. And it's like a herd. There's none of them. Why don't any of them stand out? Don't you think if they're actually right and they stand out, that would actually be good for business instead of just like, okay, well, everybody else across Wall Street did it. We'll do it too. We'll lower our forecast or we'll raise our forecast. Wow, amazing. But the fact of the matter is there's no need to pay attention to them because over time, you're going to do just fine if you don't listen to them. Just invest and stay invested. Again, you should invest, and if you have to be careful, right? You have to understand what your goals are, what your needs are. You don't want to be 100% invested in the stock market, and needing your money in 12 months because you got to buy an apartment or because you're going to whatever you need. You can't afford to take that amount of risk. But people who have a long-term time horizon, just forget about what everybody says. Forget about tariffs. Forget about should you buy the dollar or sell the dollar. Forget about COVID, with the banking crisis, forget, because it's not relevant. Forget about who's going to be president. Oh my gosh. All the time I get calls before an election, right after an election. What do you think is going to happen now that this is such and such as president? I said, you know what? I have no idea, but the chances are markets will probably be higher now in 4 years from now than they are now, because that's just what all the data says. And certainly 10 years from now, the market should be higher because that's what all the data says. I know that past performance is no indication of future results, but just based on the data, the history, we are supposed to learn from history. That's what happens. So don't try to be too smart. Don't try to be too cute, and tune out what all the quote unquote, the big wigs on Wall Street are saying, because at the end of the day, they don't have the secret sauce. The people who do well are people just buy and hold. Buy good assets and just hold them. That's the secret sauce. You heard it here. Don't tell anybody. Shh. Don't tell anybody. The Katsman says the secret sauce. For now, only for one time only, Aaron Katsman's going to give you the secret sauce to investing. You know what it is? Tune out the noise, buy good assets, and hold them. Woo! Now send the $9.99 check to me, and we can all be happy. Okay, no, I'm just kidding. Okay, but that's it. Just tune it all out. Don't care. Who cares? Tariffs, not tariffs, whatever. It's not relevant. Okay? You've been tuning into the Aaron Katsman Show. We speak about your life and money and your investments. If you like this content, please hit the like button below. If you've not yet done so, go ahead and subscribe to both the YouTube channel and to the podcast. Thanks so much for tuning in, and we'll speak to you soon.